Good morning. I'm Andy Myers at Weiss Research.
I'm Jen Amos, and this is your morning market update for Monday, August 22nd. We're seeing a rebound in both U.S. and European stocks, following last week's sell-off. The Dow Industrials fell 4% last week, and they're down 11% so far this month. The catalyst for the declines was Standard & Poor's downgrade of U.S. government debt, on the heels of a deal to raise the debt ceiling. But the negative market sentiment has been exacerbated in the past couple of weeks by disappointing economic data and renewed concerns about the European sovereign debt crisis. Those fears seem to be taking a back seat today, as banking and energy stocks boost the markets. Traders are anticipating an end to the conflict in Libya after rebels swept into the capital city of Tripoli over the weekend. An end to Colonel Muammar Gaddafi's regime would likely lead to the resumption of Libyan oil exports.
If Libyan energy supplies come back online, that would almost certainly push oil prices down in the longer term. But traders say the crude market is likely to be volatile for the next week or so as the situation there continues to develop. And today, in fact, oil prices are jumping nearly 2% to around $84 a barrel. That rally is partly due to an increased appetite for risk among investors, which is also boosting stocks. Meanwhile, traders are largely moving away from U.S. Treasuries, which have rallied recently because of their safe haven appeal. Right now, the yield on the benchmark 10-year note is moving back up above 2.1%, and the dollar is modestly lower against most of its major rivals. But the ultimate safe haven investment, gold, continues its historic run. After closing at a record above $1,850 an ounce on Friday, the precious metal is rising again today, now trading close to $1,870 an ounce.
Barring any major news, many analysts say the market will trade sideways this week, as investors await the annual summit of international central bankers in Jackson Hole, Wyoming. The highlight of that event will be Federal Reserve Chairman Ben Bernanke's speech on Friday. Last year at Jackson Hole, he signaled plans for a second round of quantitative easing, or QE2, which triggered a rally in stocks. Most analysts don't think he'll go that far this year, but they are looking for some soothing words to calm the markets. In the meantime, the blue chip index is getting a boost from two members, Alcoa and Verizon. Alcoa is jumping nearly 4% after Davenport & Company upgraded the stock from hold to buy. The analysts based the call on the potential upside in aluminum prices and strength in Alcoa's downstream segments. Meanwhile, shares of Verizon are gaining more than 1%. After a 2-week strike, about 45,000 workers will be back on the job tomorrow. The unions haven't reached a deal yet with the telecom giant, but the employees will go back to work while the unions keep negotiating. The strike began after Verizon cut benefits, blaming a sales decline in its traditional landline business.
We're also seeing a jump in shares of Lowe's this morning. The home improvement retailer is up more than 2%. After its board of directors approved a $5 billion share buyback over the next 2 to 3 years. And finally, keep an eye on financial stocks today. They're rebounding from some steep declines last week and pacing the overall market rally. But according to Weiss Ratings, 4 banks closed their doors last week. First Choice Bank in Illinois, First Southern National Bank in Georgia, Florida's Lydian Private Bank, and Pennsylvania's Public Savings Bank. All 4 of those institutions were given Weiss Ratings' lowest possible grade of E- before they failed. And that brings the total number of failures this year to 68, 50 fewer than had gone under at the same time last year. That's the latest from Weiss Research. Have a great trading day.